Welcome back to Market on Close. So we got the Dow flipping around, but S&Ps have about 0.5% plus under them right now with 30 minutes, 27 to be exact left. Mr. Kevin Green, give us some good news.
I mean, we're positive for the session here, Oliver. And
if the news is good.
Yeah, it looks a little bit better than what we saw for yesterday when it comes to the setup. Obviously, the biggest risk that we have going into the close is the unwinding of any type of bullish positioning that we've seen. But the breadth has actually expanded out a little bit more. That concentration that we were kind of talking about this morning, we obviously saw a little bit of a fade after that, but then you started seeing broader participation. So the more participation we have, the easier it is for us to at least sustain these levels for now. You are seeing some flows coming in around that 5,600 level on the put side. So that is something that is a little bit bearish that somebody just actually kind of layered into over the last 5 minutes to 10 minutes. I've seen that come across my screen, but you're kind of looking for an upside push for the most part. And once again, the 5630 area is going to be your first area of resistance. And it's been very difficult to try to break through that today. And it would be nice if you wanted to see a ramp up, breaking through that on very large volume, kind of moving up to the upside, trying to get very close to 5650 could be in the cards here. But once again, a breakdown, which once again, we are seeing some put flows here. If we do see that 55.50 on the downside, which sounds like it's a very far away number, and it is, but we've seen some of these really aggressive actions over the last 30 minutes, over the last couple of trading sessions here. But volatility has kind of come in a little bit, so that is encouraging. Might give bulls a little bit more confidence that this might stick.
The intraday chart there, is starting to coil up a little bit. We're not really, we're making the higher lows, but the higher highs are very, very marginal. But at least we're not breaking down. Does anything stand out on any of the candles? Did we get any of those positive hammers? Did we take any hanging men off the execution block?
All right, so the hanging man candles have been, for the most part, intact, really decent sell signals here. We did have a decent little hammer yesterday that did have some follow through, but overall, when you're kind of looking at it, are we making relative higher highs on just this chart right now, right? And the answer is yes. Are we making higher lows? The answer is yes. So what we are actually forming here is going to be a wedge pattern at some point. If we do have the bottom end of this channel actually holding and we bounce right back, within this range here, this will form into a wedge, and then you would expect at the apex either a breakout to the upside or break down to the downside here. Once again, I think it's a win for the bulls to at least get some green on the screen for today, continue to keep this consolidation intact here at 100-point, 110-point range, and then try to look for additional bright spots in the market to kind of fuel gains moving forward. But we'll see how this all pans out here, man. There's a lot that can happen in the next 20 minutes or so.
Yeah, especially with the Dow flipping red and Apple just really, really heavy all day, even though I think it's an okay trade-off to have the other 6 mags higher. It's a little bit lackluster after Tesla and NVIDIA. Liquidity coming back in or sparse? Is that kind of the point that we still are thin enough to have sharp, big moves in a short amount of time?
Yeah. It's still relatively thin. I would say it's a little bit better than yesterday. Actually, if you kind of look at yesterday's liquidity levels, and I wrote about this in the Market Minute newsletter, you guys could check it out and subscribe for that. If you kind of look at it, we were actually at the lowest levels that we've seen since the January leap expiration, which mechanically that does occur. When we get to very big options expirations, liquidity does come back in, comes out of the market, and that's where you see greater volatility. We're kind of at these extreme levels right now. Could it get lower? It could. And if it does, it would be pretty violent when it comes to the price action. So I would kind of lean towards, we're at one extreme right now. Hopefully liquidity comes back into the market. That doesn't automatically mean that the market's going to be green, but it means that we'll have a little bit more price stability right now. And that's just something that we're lacking, especially when we kind of get these aggressive sell-off kind of hitting these bids to the downside. The upside moves, I will say, the upside moves when it comes to buy activity on the E-mini S&P futures has been a little bit weaker when it comes to volume, and the downside moves have been a little bit more aggressive when it comes to volume. So we're not out of the woods yet here. Incremental buying and then aggressive selling is still a recipe for down markets, unfortunately. But you want to be able to keep these prices higher for now, or at least till the close here. We have this E-mini S&P 500 chart. I did want to kind of call this out too. We actually have 2 charts that I really wanted to highlight here. Today's close, if we close at these levels here, we're going to have something kind of called a bullish harami. Basically, we have a red candle, very red, large body candle, and then potentially a green candle that's within the body of that previous day red candle. That is actually a reversal pattern. So let's see how we do close out, because that actually will be something that a lot of technicians will be looking at for the E-mini S&P 500. And then we also have a NASDAQ chart too. I want to highlight this, and I'll kick it back to you, Oliver, because the NASDAQ chart, we had this kind of, I'll call it a doji. It's basically an indecision candle that we had yesterday as well when you're looking at the NASDAQ futures. And today we have a little bit more of a green candle, and that's actually, it's kind of engulfing the body of the red candle here. But the reason why I bring this up is that CCI. So CCI and RSI pretty much do the same thing. RSI is checking the last 14 days of price and basically the reaction that you're seeing for the current candle that gives you an indication of momentum. CCI does the same thing, but it takes the 14 period moving average of price, not just the 14 days itself, right? So that makes a big difference. It smooths out the price action. We are close to actually hinging to a little bit of a buy signal, getting over that oversold level. I'm not sure if we're going to be able to do that here, but if you kind of look at it over the last year, we've had 7 scenarios where this actually did occur. And when we break through 6 out of those 7 scenarios, the next day's candle is green. And so that's a trend and a pattern that can always break. But if we actually get a little bit more of a rally here when it comes to the NASDAQ 100, we kind of break above that, the trend kind of says that statistically we should have a follow-through day tomorrow. Doesn't mean that these are the lows, but that could be something that's a bright spot here if we do close higher than where we're at right now. We're not hitting that level yet, but we're pretty darn close here.
Good stuff. You know, the kind of simple point I would offer that fits with all those candles and potential for a little buy signal is just that our lows are from yesterday. You know, it's the simplest start to something positive. The fact that even though yesterday was not a good close, that we ended in the middle of the range, means that our low for ES, means our low for the NASDAQ is Tuesday morning. The low for the ES is Tuesday afternoon. The low for Bitcoin is Tuesday morning. So we've actually gone a day, fingers crossed here, 20 minutes left, without further deterioration in the chart. So you got to stop the bleeding before you can start running again.
And we hit below the 5570 level on the S&P 500 3 days in a row, and we have closed above it as well.
There you go.
So the more wicks you get, the more it suggests that more buyers are kind of stepping in. So I would say that is a good thing here. You do need a follow-through day, though. If you continue to stall out, bears might come back into the market here. I'm still looking for a counter trend rally. Next day or 2 days. That would make me feel better as a trader. Right. It will still
this
keep
doesn't
that
really count as a rally.
I mean, yeah, no, it doesn't. I mean, it is we're positive, right? It's a bounce, but it could be better. But we're still keeping that channel intact. So the technicals are still saying be cautious, but it does make sense, or you can make a case for taking an upside shot here.
Okay, appreciate that. Nice work, Kevin Green. Thanks for the perspective.